Winners are not afraid of losing, but losers are. Failure is part of the process of success. People who avoid failure also avoid success. Robert Kiyosaki. And Robert hits the nail on the head, particularly during these historic times with markets surging back and forth. A little calmer today, but still, how many days do we have the S&P up 3%, 3.5%? Not all the time. And of course, it surges much more than that over these last few weeks. But you've got to get out there. You cannot be afraid of losing. You need to practice trade. Now, let's talk about some important points for you to keep in mind when there's this much volatility. For those of you who are doing your trades and getting stopped out, we've hinted at it. I've said it in a number of ways, a number of times, but I'm just going to say it out loud. The importance of the weekly vertical crossovers and the 2-day recrosses. These 4-hour crisscrosses back and forth are very, very hard to deal with. Why? Well, they're very hard to deal with because of all the volatility and the swings that we see taking place. So what you've got to do is you've got to look on your favorite stocks, your favorite ETFs, the ones that we follow. You want to really be keyed in on big momentum shifts, big changes. The 2-day recross is not as good as the weekly. The 4-hour is not as good as the 2-day, and darn sure not anywhere near as good as the weekly. Now we've got a potential 2-day recross that's going to be happening. Oh, in fact, no, better than that, a weekly cross. So we'll talk about that when we get to it. Now, first, let's jump into the S&P 500. What do we see here? Well, as the week has been developing, we can see that we have a green up candle, wick on top, no wick on the bottom. Price percent oscillator still negative. Derivative oscillator losing downward momentum. Now we go to the 2-day chart. What do you see there? Well, that 2-day chart crossed over going up on the 7th. Could you have jumped in and tried to ride that in spite of the fact that the weekly is still going down? Yes. The risk there, though, you're taking a good bit. Again, a recross is okay when the weekly is going in that direction, but it's not a recross. It's a first-time cross. So again, you take a lot of risk by doing that. We see that the price percent oscillator is heading up. Derivative oscillator also gaining upward momentum. It crossed all the way over back on April Fool's Day. It really slid sideways and then started kicking up. And again, this is the Thursday candle, so we'll finish drawing on Thursday. It has not drawn yet. We go to the 4-hour chart. What do we see there? We can see that 4-hour chart up in the morning a little bit, then popped up higher in the afternoon, hitting a higher high, and again up 3.45% for the day. So we'll continue to watch. Now, what are we potentially looking for here? We saw that the 2-day has crossed. What does that mean? It gives us the potential of what we call a recross. That is, if this market starts to lose legs on Thursday and or Friday or next week and crosses back over on that 2-day chart in the same direction as the weekly, then of course that would give us an awesome prospect of jumping into a short trade. So we'll continue to watch, see how things develop. Keep that in mind. Now, we go to the Nasdaq 100 up, not as much as the S&P 500, but up nonetheless, 2.12%. We can see again a similar candle, green up candle. Price percent oscillator still negative, heading up a little bit. Derivative oscillator negative on that weekly chart. Go to the 2-day chart. We have not hit a higher high so far on the first day of this latest 2-day candle. Let's make sure that is in the right place. There we go. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. And we go to the 4-hour chart. Loading up quite slowly for us. Come on, there we go. And it, again, we can see where things hit a high on Tuesday afternoon, Tuesday morning, and then really a little down in the day on Tuesday afternoon, up on Wednesday more in the morning, but still not hitting a higher high. So again, Same possibility exists with a recross if indeed that occurs and the Nasdaq 100 starts losing energy, crosses over going down. We might have a chance to short that. That is much better than those 4-hour crosses, particularly with all of the extreme volatility that we are seeing. What are bonds doing? Well, we look at the weekly chart in bonds, and of course, we see that bond prices are still above the weekly. We have a red open box candle that's forming, a little wick on the bottom, a wick about the same size of the candle on top, a small candle, not reaching anywhere near a higher high than it did last week. Price percent oscillator is about flat. Derivative oscillator's been losing momentum since it peaked all the way back on the 6th, the week ending the 6th of March. We go to the 2-day chart. What do we see there? We see a down 2-day candle forming. Looks like it's getting close to a crossing over going down. If that occurs, then we'll be out of any potential play till we get the 2-day and the weekly going in the same direction. Derivative oscillator still negative. Price percent oscillator heading down, losing downward momentum. That's interesting. I wonder just what's going to happen there. If things are going to bounce off that signal line and move up, who knows? We'll wait. We'll see. That 4-hour chart is really sort of bottoming out somewhere right around that 164.75 point, something like that. So again, down in the morning, a little bit of a recovery in the afternoon. We'll wait and see how bonds shake out. Again, we have to go all the way back. Check this out, how far back we have to go when bonds crossed over going up, all the way back to the week ending the 31st of January of this year when that weekly vertical crossover occurred. And but for one big pullback week, things have been pretty nice on bonds. This is only the second red open box candle that we have seen. So interesting. We'll continue to watch, see what there is to see and learn. Now, gold. What is gold going to do? It looked so much closer to crossing over yesterday. Looks like it still might by the end of the week. Again, a down day on gold, 0.80%. We can see that we are still forming a green up candle, reaching a higher high than it did the prior week. Derivative oscillator, however, is still very negative. Price percent oscillator still trying to cross over, see if there's going to be enough energy for that. 2-day chart, of course, the prior full 2-day candle representing Monday and Tuesday of this week, nice big green up candle. This candle shows a slowdown in the movement, particularly with that negative day on Wednesday. We see the derivative oscillator still gaining upward momentum, price percent oscillator heading up. We go to that 4-hour candle. It is headed down. We have a down candle in the morning and in the afternoon, spinning tops, a bigger one. Indecision tending more down, price percent oscillator heading down, derivative oscillator losing downward momentum. So we'll have to continue to watch and see what gold does for us. Is there going to be enough down movement to pull that potential weekly vertical crossover back? Don't know. We'll wait and we will see. Hopefully, by the end of the week, we will have a weekly vertical crossover on gold. I can't wait to buy gold again whenever that happens for an up movement. That'd be great for practice trading. Now, that's it for the main show. We are done. If that's all you care about, you can leave now. For the folks that are interested in what's going on with gold, Bitcoin, and REITs, that's real estate investment trusts, let's look at oil. Oil gathered a little bit of energy today, up 6%. When I say a little bit of energy, it's hard to tell here because, of course, gold lost half of its value over the last many weeks. We don't have much of a strong candle there. A lot of indecision on that weekly chart. Price percent oscillator still going down. Derivative oscillator losing downward momentum. 2-day chart just won't cross over going up, will it? Just doesn't have enough energy yet. We go to that 4-hour chart. And of course, it crossed, well, it just bounced off the red signal line back there, moving away back on the 1st of April. Since then, since about the 6th, though, it's really been losing some energy. And again, those are our Heiken Ashi candlesticks. Ended up the day with the price percent oscillator moving up a little bit. Derivative oscillator still losing. losing upward momentum. So again, gold struggling to do something, just sort of languishing there in the $5 range. So after being up to a high of around $13, bam, whoo, that's terrible. So nothing to report on gold at this time. Bitcoin down again, 0.6%. Now again, looks a little better than gold does. It bottomed out at a low of about $5,000 after topping out of a high of over $10,000. That is crazy loss. We'll see. Bitcoin is again trying to gain a little bit of steam. It is a green up candle for the week. Price percent oscillator not rocketing down like it had been. Derivative oscillators about flat. 2-day chart trying to cross over going up. We'll see if that happens. That sets it up maybe for a crossover going back up on the weekly chart. We'll see if and when that occurs. Don't forget that 2-day candle finishes drawing on Thursday. And we can see a nice track up over the last several days, starting there in the afternoon of the 2nd of April, moving up and then slacking off the first red candle that we have seen since that movement. And again, we'll wait and see how these other charts react, particularly that weekly. That's what you got to have before you're going to see that major change in trend. Now, those of you who care about real estate, of course, Vanguard is the largest real estate investment trust, so it gives us some idea as to what Corona is affecting real estate. Around the $99 mark, all the way down to a low of $155. Sounds a lot like Bitcoin, doesn't it? And what is happening? Well, up today about the same amount as Bitcoin. Bitcoin up 6%. The Real Estate Investment Trust up about 6.82%. Have a green candle trying to form. Price percent oscillator flat. Derivative oscillator losing downward momentum. So I don't know that we're going to have a crossover anytime soon going up. Now that 2-day chart is trying to do that. That has to happen first before it can drag the weekly. It's going to take a lot, though, to recover everything that has been lost for a real change in trend. We'll see if indeed real estate goes up again on Thursday, and if that cross is sustained. Remember, you never call a crossing until the candle's fully drawn. A 2-day candle's not drawn until the end of 2 days. Weekly's not drawn until Friday. What do we see on the 4-hour chart? Again, tracking up, a lot like Bitcoin, from the 6th on up. And up in the morning, a little further up in the afternoon. So we'll continue to keep an eye on these things and see how these markets recover as the bull trap is set. If you haven't listened to Corona Investing, I hope you will do so. I will put it in the show notes at the end of today's video. Folks, we love to hear from you. Thank you so much for everyone who's purchased our books. I fulfilled a bunch of orders today. And I hope you enjoyed my traveling video yesterday. Patreon members, I have a recording of the question and answer session for today. Actual video for you. Going to be sending that out to you in an email later today. And again, so appreciate the Patreon members and their support. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.